I hope we've not been punked. I'm really excited.
This week in e-commerce, episode 128. I am Mal Chia, back with you for another week with Alex Ross. Alex, public holidays.
Yeah. I mean, we can't complain too much because we're one of the lucky states that got one, but I think we're all feeling a bit, I don't know, just really busy trying to squeeze 5 days into four.
That's exactly how I feel. That's why we're recording 24 hours late, and this will be coming out on Thursday morning rather than the standard Wednesday at 6:30 a.m. Look, and I'm going to be the first to join that petition to nationalize all public holidays, because especially as we work in like this remote world where honestly I don't work with any clients in my home state of South Australia. All my clients are Sydney based or Brisbane or Melbourne. Public holiday really throws me out, considering 2 out of the 3 didn't have a public holiday.
It feels like when you're saying, so sorry, I've had a public holiday, I'm back online, that you're just rubbing it in their faces as well.
But at the same time, chances are, I haven't actually looked at the numbers. I don't know whether other states have more or less public holidays. I feel like Victoria always has a public holiday. If they put on a sporting event, bang, public holiday. So,
Yep.
yeah.
I'm pretty sure New South Wales get the short end of the stick and they have less public holidays than average.
That's why everyone in Sydney has to work so hard, right? So
Yeah.
you're always working when you're there, as you and I know full well. All right, well, we've got a great episode lined up. There are so many amazing stories, and it's very Australian-centric as well, I should say. And we're going to bookend this with 2 pretty big ones, actually. So there's a lot to unpack this week, so we're going to dive straight into it. And the first one is Koala are going to be IPOing. They've announced that they're looking at April 1st to be when they're planning on listing on the ASX. Now, they're seeking to raise $68 million at a $300 to $305 million market cap, which will be a price to earnings ratio of 10.5, which is pretty significant. And when you look at the underlying numbers, EBITDA has grown 42% in the last year from to 276 million, which is phenomenal. Sorry, I got that wrong, actually. The EBITDA increased by 280% to 13.5 million.
Yeah,
I got that right. Yes, that's right. Revenue grew 42% to 276.
Yeah, right. It's impressive numbers to be leading into an IPO with, that's for sure.
Yeah, and do you think it's a weird time to be IPOing as well? Since we've generally seen in the last couple of years, IPOs have not been as prolific as they once were, as I think a lot of the venture money and investor capital is going towards AI stocks as well. So it's kind of surprising that they're choosing to launch now, but it seems to be a pretty good time given their resurgence.
Yeah, and they're in my opinion, they're leaders in this space, right? Their brand is super strong. Their R&D is there. So if anybody can pull it off, it's Koala.
Yeah, look, I got to say, like in the very saturated market of mattress in a box, but also D2C furniture as well, they've continued to really stand out. And I think their product is actually a really good product. I used to have a Koala bed, but and I loved it.
What's been impressive to watch, I think, is just that growth in their inventory, moving into new categories, pulling it off really, really well. And then I always think it's cool to go onto Facebook Marketplace and you start to see those products being resold as well. And then that helps with that overall value piece. So they've got worth in the market.
Yeah, absolutely. All right, our second quickie is the Iran war. The Retail New Zealand CEO, Carolyn Young, has warned that an ongoing US-Iran conflict is going to continue to push up fuel prices and shipping costs, which is actually going to have an inflationary effect, unfortunately. And they've actually seen that in New Zealand, fashion sales have fallen by 2.3% in December, and year on year down to $1.5 billion. So it looks definitely something to watch out for. What's your take on this from a retail perspective, Alex?
I think it's, I don't know, like disappointing on so many levels, but for retail, we were just starting to get some sense of normalization and then just get thrown to something else. So it's just kind of seems to be the way the last 5 years have been, right?
Yeah, and possibly another 3 as well, unfortunately.
Correct. Yeah, it's not going away anytime soon. So it's just going to be one to watch in terms of, to Carolyn's point, how that's going to start to impact pricing for retailers and then how they offset that to the consumer end of day.
Yeah, given that your shipping costs are definitely going to be increasing, the price per barrel is now at a record high, I believe. And even just going around to like a petrol station around anywhere in Australia, you can see that prices have shot up well over $2 in most locations. again, like reaching new records. So you're going to have that pressure of depressed consumer spending as people have to spend more on fuel to get around, because I don't think their transport will necessarily change, but also inbound freight as well. The cost of that is going to go up. And there's absolutely no doubt that shipping carriers will be increasing their prices. Even the airlines, Qantas, Virgin, you can already see that airline prices have actually shot up as well in response to this. So you can see the pressures all around, which unfortunately does not bode well for discretionary spending.
No, but potentially a silver lining is there'll be less international travel, so there'll be more spent domestically on consumer goods.
Well, it depends how long the war goes for. The latest reports are that they're kind of, well, look, they're kind of non-committal and kind of like changing their minds about it every single day. It's going to be a quick one. It's going to be a long one. But yeah, I think there's a lot riding on that. Okay, and our final quickie is Lavisa have up to $500 million in their annual revenue, and Cotton On are looking to expand into India. So Lavisa is an interesting one because we did talk about them before, and their sales were actually shrinking in Australia. But this growth they've seen is 22.7% year on year growth. And a large part of that is due to their increased store network. So they're actually increasing their network now to just under 1,100 stores in 50 countries. And most of that growth is now being driven by that international expansion. And then you're also seeing Cotton On as well pushing into India, which is a market which not many Australian retailers really look at. And obviously, India being the second most populous market in the world, if they can crack that, that could be a gigantic unlock.
Yeah, absolutely. I think it's given what we've just covered, interesting to see that there's all that global growth and there's still so many opportunities there. India, I'm keen to see how that plays out for Cotton On. To your point, we don't see that happen too often, so it's going to be one to watch for future brands.
Yeah, but definitely something which most retailers should be looking at, given how soft Australia is currently. And I think after the last interest rate rise, we definitely saw a drop in conversion rates. Matter of fact, in a lot of the different analytics accounts I have a look at, on the date of the interest rate rise on the 18th of Feb, the very next day, conversion rate dropped dramatically. So
Mm.
I think with that in mind, you kind of need, if you are looking to expand rather than just consolidate and bunker down in Australia, you do need to be looking internationally, because it's going to be really hard here, I think, for the foreseeable future, as we've said before.
For sure. And I think whilst it's not covered here, I imagine Cotton On are opening up multiple stores over in India as well. And to that point with Lavisa having, what was it, 1,000 plus stores over 50 countries, not just having that online shopping experience, but having that D2C in these localized environments as well.
Yeah, absolutely, absolutely. I think the report as well show that Cotton On was actually particularly well placed for India as well, given that they're known for having more inexpensive goods. Okay, my mic seems to be playing up a little bit. All right, here we are. Okay, that's our quickies done for the day. We're going to get into now our deep dives, and our first one is our favorite topic: Coles and Woolies, and dynamic pricing. Now, I know a thing or two about dynamic pricing from my days at Uber. Matter of fact, I think we were the pioneers of dynamic pricing, particularly in a very public-facing market. Obviously, dynamic pricing in flights and hotels has been around for a long time, but under some questioning, Coles and Woolies have both not ruled out the prospect of introducing dynamic pricing, due to the fact that they're now installing electronic shelf tags, ESLs, into 600 plus stores for Woolworths and 170 New Zealand stores in around the country in New Zealand. So this is pretty dramatic. And also Coles are launching a trial of 11 stores. And what this means is that on the shelf, those prices you see, rather than someone printing out a label and sticking it in there, are going to be able to be updated dynamically. So for me, it's like, how could this be used or misused to kind of direct traffic or direct sales towards other product?
Yeah, there's a few questions there, and like, what are the levers they're pulling to change the pricing? Is it got to do with inventory availability, popularity, those types of signals?
Yeah, you can imagine going to a Woolies on Christmas Eve, on 4:59 p.m. on Christmas Eve before Woolworths shuts, and the eggnog, which was $4, is now going to be $9 because they know you need it.
Yeah.
Right. So you think about all those things, like that transparency is going to go, because they're going to be able to adjust that price based on demand. Now, there's no guarantee they're going to do this, but they haven't ruled it out. And that's the big one here, that we all know that Coles, Woolies, they are, profit seeking, rent seeking enterprises. And you got to think that there's no way they're not going to be doing this. And also particularly when they're introducing private label as well,
Hmm.
why wouldn't they change prices on other brands to direct more sales towards their own private label products?
Yeah, it seems just to me an interesting move given everything else that they've been in the news for and trust being such a big part of that business. And this makes people feel skeptical.
Yeah, I think when you start doing this as well, particularly if you are a brand who is selling to Coles and Woolies, you got to really think about like who actually like we all know that they have the vast majority of the power there, but now you lose even more of that because it doesn't really matter what your RRP is if they're just going to be able to dynamically change your price to impact your sales, particularly if they're going to be launching a competitive product as well. So, look, like you said, it's a surprising thing for them not to deny, given that they are under ACCC investigation at the moment for price transparency around promotions and discounts. So this is just something else which is going to ultimately hurt the consumer at the end of the day.
Hopefully, not.
Yeah, but having said that, though, Bunnings did come out and say that they absolutely would not be introducing dynamic pricing. So at least a shout out to Bunnings for trying to be the good guy in all of this.
We all
Yeah,
love, but
but like with anything else, this is just such a reminder to all brands to really make sure that you are transparent with your pricing because this just will fuel more doubt in the market around is that price correct or not. So even doing price tests as well, that could introduce more doubt. If people are looking at it on two different prices, you've got one A/B test of on one device is showing one price, the other one's showing a lower price. That just starts to sow more doubt and will drive more consumers to wait for that discount again. So look, it's all about trust at the end of the day, and moves like this when it can be so radically affected by just two players in the market, aren't a good thing for consumers. So I definitely do think we need some stronger laws around how this ESL technology is going to be used.
yeah. And look, hopefully, because they haven't had that denial, that now there's more eyeballs on this from a governance perspective as well.
Yep, 100%. All right, our second deep dive is looking at the ABS data. The ABS have just released their retail spending data in March for January, and the headlines actually looks pretty positive that overall there was actually a 5% year-on-year increase in total retail spending in January compared to January last year. Now, this wasn't evenly distributed across every single category. Cafes and restaurants made up the lion's share of that with 8.7% increase. Other retail was 7.8, clothing with about 6.1, household goods 4.1. Even the spread across most states, WA was the strongest, all the way down to Victoria, which grew the slowest. But the one catch with all this, though, is that this all happened before the rate rise in February. So, what do you think, Alex? Did you think that we actually had some momentum coming out of Jan?
I did for sure. I think that from talking to retailers, everybody had a great peak retail period and saw that effects with January. Obviously, depending on the category, but people are on holidays, they're out living their best lives in summer with their wallets open. I would love to know, and I'm sure they did. The RBA had these figures when they came into the interest rate meeting in Feb.
Possibly, possibly. I don't actually know what data the RBA or the data which the RBA look at,
Yeah.
but this may have been one of their considerations. But generally, it isn't. I think when they make those calls, they are just looking at the cash rate
Yeah. Okay.
and inflation primarily. So yeah, look, I think yeah, you're right. Like people did have a bit more positivity, but I think that positivity has very quickly gone now. Into as we're into March. And I think the data we've seen, since then, particularly with the interest rate rise and what brands are generally feeling right now for those Australian-only retailers, suggests that we are kind of like bracing ourselves for kind of more pain as well. So, from a brand perspective, Alex, what do you think brands should be looking at right now, given the context of where we're at?
I think, look, it's something we've been talking about for a while is obviously profit margins, the profitability being really laser focused on how they're elevating different products to make the most of that opportunity. And then obviously aged inventory as well. I do think that newness helped in January and helped some brands that I know in February as well. So not having that aging inventory affords you kind of that luxury of bringing new products in, which always helps with that conversion rate in the day as well.
Yeah, I think bringing that newness, giving people a reason to buy now is really critical. And that's what we've talked about before about that need to really provide value now so that people look at things and go, actually, do you know what? I can't wait for this. An example of this would be the Pokemon collections, which were launching a few weeks ago, which we talked about. And a couple of my clients who did a Pokemon launch had exceptional days because there was demand there. There were people who were waiting for this and they knew that there was going to be limited supply. So they bought now. So we need to really focus on giving people that reason. But if you don't have that reason, I think this is a real time to start actually thinking about, okay, let's actually start worst case scenario planning, as well. What do we look like if sales are going to be down 80% on last year, 20% on last year, I mean, so where we're operating at 80% of past revenue, maybe 70%, and start looking at what does your P&L look like? Where do I actually need to make some cuts? And I think that's something which a lot of retailers need to be thinking about now, but also looking at rather than trying to force bottom of the funnel conversion, if you are seeing poor efficiency, really look to reallocate that towards more demand generation rather than demand capture as well. And that's something which I'm seeing a lot with a lot of brands who struggle going, actually, we need to focus more on converting people right now. But the reality is there's actually fewer people. That pool of people who are ready to buy now has actually shrunk. So you need to be doing more work at the upper funnel of convincing those people who aren't even thinking about buying your product now to really start thinking about maybe when they're ready to buy from you instead. But yeah, it's going to be, I think, a lot of tactical changes which are going to be required.
Yeah, I think as well, like playing on those emotions to a degree as well, and people wanting to have those like comfort purchases
Mm.
to an extent. With the conversion rate piece, I think that there's that focus on, okay, how do we get more out of the shoppers that are converting? And that's really important, or really focusing on VIP, high spend shoppers, and how you can have that personalized experience for those shoppers. And that's worth your time spending looking at that profile or segment of shoppers rather than everybody seeing this really stale, stagnant one experience.
Yeah, so you're talking more about just like personalizing like cross sells and upsells. You're looking at how you can make sure that you're tailoring that shopping experience for that customer.
Yeah, and how can you so you've got your segment of shoppers that are those VIP high spenders. How can we use that data to have even further personalized experiences for them on site? But to your point there on driving demand and that awareness, how can you then take that and have more personalized experiences on the site as well? So starting to, and this is a big focus for a lot of our brands is um, how can you have this true omni-channel experience where you've come from a TikTok ad, you've got that same creative on site, and there's that really fluent experience as you jump across different channels.
Yeah, and I think that's definitely an expectation which people are wanting more and more as well. Like you say, to be able to land on there, if I'm clicking on an ad which is about a certain problem or an issue, actually send me to a page which is talking about that. Don't send me to a product page. Don't send me to a home page. And look, and that's something which a lot of retailers, that is probably like a really quick win for them to
Mhm.
think about, where are we actually sending people to? Is there an alignment between the ad or whatever they've clicked on and the destination?
Yeah, exactly. And that whole cohesive experience.
Yeah. So definitely someone for everyone to start looking at. If you're not looking at your conversion rate data, take a look at that. That is the best leading indicator you can have about the health of your business, rather than relying on the ABS data, which, as we've just talked about, that was
Mm,
done back in January.
yeah.
It's at least 6 weeks old, which means that it hasn't factored in interest rate rises, wars, Epstein, anything like that. So who knows?
All of the things.
Yep, yep. Now, our final story is a big one, and this is one 15 years in the making. The Iconic is finally profitable. I can no longer keep ragging on them for not being profitable, because they finally are after 15 years, which is remarkable. Their adjusted EBITDA is up 71% to $45.7 million. So it's not even just like a slight profit of going from like negative to like 1 million or 100,000. They've got a $45.7 million EBITDA.
It's I feel like we've all been waiting for this story. I was very excited to see this. But yeah, to your point, to come in so strong as well. It's like, where have you been?
Yeah. Look, and it's remarkable how they did it as well. Like their NMV, so net merchandise value, so the total value of the goods they sold, was $893 million, which was up 6%. So they did experience some top line growth, but that was 6% versus a 71% increase in adjusted EBITDA. And this is the first time, obviously, they've done it in 15 years. There've been rumors about this for a while. They've kind of teased the market a little bit that, hey, this might be the year we're profitable, but it always comes back that they're not. But now they finally are. So, Global Fashion Group, which is based in Luxembourg, that's the parent company who also own Lazora. So, Zalora, in Southeast Asia, which is another big fashion marketplace. The Iconic is their standout performer. But what I love about this is that they didn't kind of rush to it by making any drastic decisions. There were so many like small levers which they pulled to kind of, which they did to kind of get here.
Yeah, and they stayed true to that vision in that kind of slow burn,
Mm.
but, it's awesome to see.
Yeah, I think the big thing here is that they stopped relying on discounting, which is something I've noticed a lot. Where if you look back a couple of years at the Iconic, pretty much people would only buy from them when they were on sale, when they were doing a big promotion. But the last 12 months, they've really focused on doing fewer promotions and actually moving more upmarket with the products which they're directly selling as well. So in terms of that, they had a big focus on their private label brands, their staple brands, which are really low cost and also very poor quality as well to drive a large part of the sales. But now they're moving more premium, dare I say, even a little bit more luxury, and trying to sell them at full price, which obviously gives you a better gross margin. But I think the big one for them has also been in the marketplace shift as well. Similar to what we're seeing in other markets like the US, marketplaces are growing quite a lot. And we've talked about marketplaces before with Coles and Woolies and theirs. The Iconic is also a marketplace. And they're seeing a growing share of their gross merchandise value coming from their 3PL marketplaces, which are brands who are selling their own products on the Iconic, and Iconic just taking a clip of the ticket on the way through. That means they're making a higher margin on that and also being very asset light as well, not really having to worry too much about the ops and logistics costs which go with that.
Yeah.
So it's really great to see that this wasn't something they tried to turn around overnight. They played the long game with this, and it's quite phenomenal.
Yeah. We've got lots of brands, lots of clients that are on the Iconic. I think it's a great strategy for that awareness piece. For me, the world is noisy, social media is noisy. There's so much to keep on top of. The inbox is, overflowing with promos and things like that. So, the value prop of being able to jump on the Iconic, have your preferences saved, and being able to kind of go through the broader marketplace and get all of these great brands at once, and the fact that they've got those high quality brands coming onto the site, they're profitable, I think is only gonna kind of help strengthen that case and snowball further.
Yeah, and to something you said right at the start of that was that there is so much noise out there in the market that there's so many brands who are competing for your attention.
Exactly.
Marketplaces like the Iconic, particularly when it comes to fashion, become this really easy place where you can just go there and shop instead of being bombarded by 30, 40 different ads. Now, I still believe that DTC is a cornerstone of any brand, but you do need to start thinking about these marketplaces and the right sort of marketplaces as well, because the shopping behavior there is different. Rather than this being this noisy place where people are just going and visiting lots of different sites and bouncing around, they can go there and actually discover at their leisure, which for the Iconic also opens up retail media as well. And that's something which we haven't talked about yet, but that I think over the next 12 months has to be a big part of their growth strategy as well.
Yeah, absolutely. I think it's a great place for shoppers to discover your brand. And then I do know some brands where they'll have, that exclusive edit on
Mhm.
Iconic, or rather, they'll have a smaller edit and then they'll have the rest exclusively on their D2C. So there's strategies to have value for both of those.
Yeah. Yeah. So a lot to take away from this episode, and a couple of good stories as well with the Koala IPOing. I think hopefully by the 1st of April. God, is that actually a good date to IPO? Like April Fool's Day?
I didn't even
Maybe that's
think
an
of.
April Fool. Have we been punked?
Yeah. I was about to say, I feel like we're all over April Fools with the AI, like, Vegemite's doing a collab with Crocs, or, those types of silly ones that we used to see. I hope we've not been punked. I'm really excited.
Well, hopefully you haven't. But one thing which we definitely haven't been punked on is the Iconic becoming profitable. So congratulations to the Iconic, everyone who's been involved in that journey there, and to the team there.
Mm.
Great work. Great work to see where you guys are at now.
Yes,
So
and it probably does well to a fair few of their team landing in the top 50 for ecom the other week as well.
that's absolutely right. That's absolutely right.
Timely recognition.
All right, that's all we got time for this week. Alex, we will both be at Retail Fest, and I'm trying to work with Dylan at the moment to see if we can do a live recording there. So everyone listening, watch a space. If you are going to be at Retail Fest, we should be there. Well, we definitely will be there in one way or another. But if we do a live recording, maybe we're going to invite everyone down to it and have a
Yeah.
coffee on us.
Yep. And maybe we all email Dylan in protest and it'll happen sooner.
Yeah. Well, Dylan, if you're listening, look out for your inbox. All right, that's all we've got time for. In the meantime, keep innovating, keep growing, and keep selling. And we'll be back next week.
Talk soon.